Okay, so today we're doing a deep dive into Kalshi. You've probably heard of them, the platform that's making waves, claiming to be the first fully regulated prediction market here in the U.S.
That's right. And it's this really interesting space, isn't it? Part finance, part entertainment almost.
Exactly. You can trade on, pretty much anything. Will it rain in Chicago? What's the Fed going to do with rates? Even things like celebrity album releases. It's a wild mix.
And they're not playing small ball here. We're talking about a platform that's attracted funding at a, get this, $5 billion valuation.
Wow, 5 billion.
Yeah. And they're claiming something like 60% of the global prediction market share, which is, frankly, enormous for how relatively new they are on the regulated scene.
That 60% number is huge. If they really have that kind of dominance, it does make you wonder about some of the user feedback we've seen. But let's hold off on that for a sec. We should probably start with the regulation piece.
Definitely, because that's the absolute core difference, right? Unlike a lot of competitors who might be offshore or, operating in sort of murky legal waters, Kalshi has the official stamp. They're CFTC approved. That's the Commodity Futures Trading Commission, the main U.S. derivatives regulator.
And they got that designation back in 2020.
Yep, designated as a contract market. And that legitimacy, it's a game changer. It opens doors, theoretically, to the whole formal financial system.
Okay, so that's the big picture. But for, the casual user, maybe someone just dipping their toes in, there are actually some interesting perks.
Like what?
Well, our sources say no monthly fees, no account minimums to get started. And this one's surprising. They apparently pay users 3.75% interest on cash, just sitting in the account.
Whoa, 3.75% on idle cash. That's actually pretty competitive right now.
Right, especially if you're just waiting to jump into a market.
Okay, but that interest has to come from somewhere, which brings us to the fees. And this is where things get, let's just say, complicated.
Complicated how?
Well, the sources we looked at describe the fee structure as confusing, potentially even brutal. It's variable.
Meaning it changes depending on the trade.
Exactly. It depends on the probability of the contract you're buying. Fees can range from as low as 0.07% all the way up to 7%.
7%. Ouch.
Yeah. So, for example, if you're buying something with, say, an 80% chance of happening, pretty likely the fee is around 1.4%. Manageable.
Okay.
But if you're taking a punt on a real long shot, maybe something with only 20% odds, that fee jumps to 5.6%.
So they're charging you more for taking on more uncertainty.
Precisely. They're pricing in the risk, and it doesn't stop there. The fees stack up.
Oh, there's more.
Oh, yeah. You've got quarter-cent maker fees per contract. If you deposit using a debit card, that's another 2% fee right there. And then a flat $2 fee just to withdraw your money.
So they kind of hit you coming and going, makes those low minimums feel a bit less attractive if transaction costs eat into everything.
It definitely adds up.
Yeah.
And speaking of complications, there's a bit of political drama tangled up in this too.
Ugh.
Do tell.
Well, Donald Trump Jr. was actually serving as a strategic advisor to Kalshi earlier this year.
Okay.
But then he shifted gears, invested in, and joined the board of a direct competitor, Polymarket.
Wait, really? While Kalshi's fighting for election betting rights?
Exactly. It creates this really awkward conflict of interest, especially because the CFTC, remember, the regulator is currently appealing Kalshi's ability to even offer political election markets. And the commissioners at the CFTC were, influenced by the previous administration.
Okay, that adds a whole other layer, doesn't it?
Yeah.
Politics and regulation all mixed up. So, putting that aside for a moment, what about the actual platform? How does it feel to use?
Right, the user experience. Well, the consensus from reviews seems to be it's legitimate. The interface looks slick, kind of like Robinhood or Coinbase.
It's like sent a butt coming.
But it's far from flawless. The biggest functional complaint, by far, seems to be liquidity. It's described as painfully low on many markets.
And low liquidity in trading is bad. Really bad. Devastating. It means huge slippage. You try to buy or sell, but there aren't enough orders on the other side, so your trade executes at a much worse price than you expected. You can lose money just trying to get in or out.
So the sleek interface doesn't help much if the core trading function is unreliable.
Pretty much. And then there are the other common complaints. Bugs in the platform, withdrawals being slow, sometimes even reports of misplaced funds, and customer support taking weeks to respond.
Yikes. Not exactly the seamless experience people expect from modern finance apps. Sounds like a steep learning curve, too.
Definitely steeper than your average Robinhood user might anticipate.
Okay, so let's try and wrap this up. Kalshi is legitimate. It's regulated by the CFTC, hugely ambitious with that market share claim. but it sounds like it's still pretty rough around the edges.
That seems fair. High fees, inconsistent liquidity, some operational hiccups. The ambition is there, the regulatory framework is there, but the execution for the end user seems variable.
Which brings us to the bigger question, maybe for you, the listener, to think about. Now that we have betting on real-world events becoming federally regulated in the U.S., under the CFTC, no less.
Yeah. Does that fundamentally change how we draw the line between financial speculation like we see in traditional markets and what most people would just call gambling?
It's a blurry line already. Where do platforms like Kalshi fit? What standards should define this new officially sanctioned market? Something to ponder.